So we kind of slammed right up into the monthly Gamma Max and were immediately rejected. Look how accurate that shit is. It was off by 33 cents. Anyway, yeah, rejected off of that, but didn't fail yet. Big gap to the downside, though. We got a bit of an what's called an island forming here. This may fill back to the downside over the next few days. Generally, these fail. Since we didn't get a continuation up to like 57.50, there's a very good chance that the consolidation at the end of this move will, wherever it falls, Monday or Tuesday, maybe tomorrow, will break down. So keep that in mind. That there could be kind of a significant pullback, and the prior close was way the down here, so it's a pretty big gap back up to spot. ES broke out of the 57.8250 level, which was pretty close to the prior high, but managed to get a new high before failing. Dixie down after rallying all night long, and part of this morning. It's finally fallen back towards yesterday's close, down about 30 points. Yields at the top end of the curve are kind of starting to flatten out, but they're still elevated from where they were. And the 20-year is now back above 4.1, which is kind of interesting. Correlation continued to move down today pretty rapidly on the 1 month, so a lot of short vol coming in on the indexes there. Carry trade got levered up pretty hard last night on the top end of the curve, but the nearer dated, like the 3 and 6 month end, saw leverage continually fall off through this period. It did close the day at 6.5x, up from the prior low of 6.2. So they are levering up the carry trade pretty hard, probably as risk diminishes going into the BOJ meeting, where nothing is expected, and that's going to be tonight. If there is no rate increase out of the BOJ meeting, they're probably going to lever this up even harder, not because they necessarily want to, but because they need to. A collapse of the carry here, especially after the US cut, would be very rough. And the last like 3 weeks of bond positioning where, UST has dropped dramatically, especially at the front end. Yields have come down quite hard. And the yield curve at the 10 and 2 is uninverted. It's definitely something to think about. Bond vol, not too much. Skew continues to turn up, and the risk of an outsized move, like 2-3 sigma move, is going up quite rapidly. Skew's at 167.42, and if you look at the long run average for this, that's insanely high. This is we're packing in a lot of volatility risk here, and there is not sufficient tail risk hedging. We're losing those long out of the money puts, and that opens up the greater probability to see it's like a 2 or 3 standard deviation move in price in the opposite direction. 66.4% of the S&P at its 20-day moving average or above. And we're continuing to see correlation start to tick up between VIX and cash VIX on the daily. Some of these are early warning signs of bearish reversal, so pay attention to them. They could be meaningful. Fed fund futures today, after this morning's labor data, now pricing in 0.75 rate cuts by January, which would be another 50 point and another 25. Weekly diamond top. Shine bright like a diamond. Don't move. Got him. Yes. You. All right. Anyway, draw it. I don't know where my pen is. Oh, here. So I hope you guys are ready for a new all-time high, because the last time we had a diamond top on the weekly, we ripped up 670 basis points. So I'm pretty excited. Should be fun to see it play out. I'll buy you some diamonds. Thanks. All right, guys. Thanks so much for tuning in. I'll see you bright and early tomorrow. Night.